Crypto. All the crypto news in one place.
Fiat money only works as long as people believe in it, and people are losing confidence. So when that confidence fades, people run towards the things that actually exist in real life, have tangible value, have, real assets. And what we're seeing now isn't the beginning. It's the moment that the illusion has started to crack. And she's not the only one that sees the problem with the fiat system and how Bitcoin fixes this. Fred Krueger describes two scenarios. One, the precious metal story grows and Bitcoin is next. Or two, the silver bubble collapses and capital reflows into Bitcoin. Either way, Bitcoin fixes this.
That's the key themes to watch in 2026, and not just in crypto, but more broadly as well. And one theme is AI's economic impact, especially on productivity, because its integration is new and not yet reflected in official data. They even compare the current AI boom to the tech euphoria of the late 1990s. Now, for context, Coinbase has been getting into AI over the last couple of years, which is presumably why it's the first thing that they mention. Anyways, another theme is crypto regulation. In the US, the Genius Act set clear rules for stablecoin issuers in 2025, while the Clarity Act aims to clarify market structure rules in 2026. Meanwhile, the EU's MiCA bill is in full swing, and regions like the Middle East, North Africa, Asia, and Latin America are developing regulatory frameworks of their own. The report argues that clearer rules will allow projects to innovate and explore new possibilities, including more advanced crypto derivatives, a wider use of crypto in payments and transactions, and new ways to deliver value to token holders, such as enhanced staking and fee distributions. Now, another theme is also a no-brainer, and that's spot crypto ETFs and digital asset treasury companies, or DATs, both of which swung open the door to institutional adoption. The good news is that the report expects spot ETFs to gain momentum.
Democrats are terrified with the Treasury Secretary Scott Bessent confirming an economic boom in coming 2026.
I would categorize 2025. We had some important victories, some important policy announcements, some important movement. But as I've described it, 2025 was setting the table, and especially on the economy, I think the feast and the banquet's going to be in 2026.
Feast and the banquet. Overall, inflation, the number ending the year for inflation was great, 2.7%. Mm-hmm. What's still out there is the Supreme Court weighing in on tariffs. What do you think about 2026?
Well, the tariff announcement is certainly going to be consequential.
What we have that I think is critical is trust. We have the regulatory framework. Now, that's really critical right now, that the regulatory framework really solidifies. We just had in the United States, the passing of the Genius Act, and that ability to have clarity for us from financial institutions as well as the fintechs is really critical for us.
And banks need to catch up. Right? Banks are a little bit behind right now. Some banks are well ahead, right? Some banks have been building for years. Franklin Templeton has been working in the blockchain space for several years. I think it was 6 or 7. We know the DTCC has been working on this for about 7 years. So banks knew what was coming. The smaller, medium size to small banks, community banks, credit unions, those are the banks most at risk here.
In a recent post from Decrypt Media, where they have a full breakdown of who dominated the stablecoin market in 2025, they said that the stablecoin supply hit $314 billion in this year, but market cap doesn't tell the full story. Now, one of the players that did dominate is, of course, Ripple. Jack McDonald from Ripple said that RLUSD is one of the fastest moving stablecoins, proof that real-world utility and institutional readiness matter as much as supply.
They spend 5 hours of that on investment management. A lot of people think of institutions, particularly financial advisors, spending all day studying the markets. They spend 10% of their time studying the markets. Their average allocation to crypto might be 1% of their portfolio. That means each week they spend 3 minutes studying and thinking about the crypto market. That is actually how the numbers knit out.
3 minutes a week understanding the crypto market. That is what's going to drastically change in 2026 as more investors are interested in entering the blockchain space. When regulation is passed through the Clarity Act, maybe in January, that is what we're hearing from David Sachs, the crypto czar. That is going to kick off a digital arms race of investment and people interested in investing. So that 3 minutes could become 30 or 40, and that 1% allocation could become 3 or 5 or even 10. And that is where the wave of trillions of dollars could come into in 26 through 2030.
So why do they like ETFs? Because they know them, they trust them, they make it easy, and in 3 minutes they can buy it.
The future lies in an interoperable network of networks model, noting that winners will be those that work with others to enable atomic multi-chain settlement, unified liquidity pools, and synchronized real-world assets, another key theme for 2026. Now, the authors expect tokenized equities, aka stocks, to grow the fastest, and these assets can trade on-chain 24/7, settle almost instantly, and integrate directly with DeFi, giving them an edge over traditional stocks, where capital can sit idle outside market hours and settlement can take days. Prediction markets are also predicted to be a key sector to watch. And interestingly, the authors say this is because of a provision in July's One Big Beautiful Bill Act that limits tax deductions for gambling losses to 90% instead of 100%. Now, this may seem minor, but it could create phantom income where people owe taxes on small wins or even losses. And prediction markets could offer a more tax-efficient alternative. Prediction markets are also likely to grow as tools for forecasting.
We did recently hear from Stephen McClurg from Canary Funds that did launch the HBAR ETF. This is from Token Relations. We have tokenizing assets like the Hedera HBAR ETF can allow for 24/7 borderless trading, bringing more access to major institutions globally. This is pretty attractive to people around the world. Check it out.
So we saw a massive opportunity in putting the HBAR token into an ETF, and sure enough, it's played out better than some tokens that have a larger market cap. So we've been very pleased with it. We do believe that from a tokenization standpoint, it's going to be really important, because what tokenization of an ETF allows is 24/7 trading. So an ETF itself is only trading within market hours in the US on the exchange that the trade is on. But this allows more 24/7 trading, which is pretty attractive to people around the world.
A United States Officer of Comptroller granted conditional approval of the Ripple National Trust Bank, allowing RLUSD to operate under federal and state oversight. RLUSD expands the new chains, which is great. Abu Dhabi's green-listed RLUSD. Gemini added support for RLUSD. And there it is. You are telling me, well, how does that affect XRP? How does that help XRP? Because we're not seeing.
Right?
There you go. We're not seeing
there for the winter, but if you can't do that,
a lot of momentum for XRP. Well, I'll tell myself, not you guys, but I'll just tell myself, Oscar, trust in process.
XRP attracts capital while Bitcoin ETFs lose 443 million. Bitcoin ETFs saw 443 million in outflows last week, while Ethereum lost 59. XRP stood out with 60 million in inflows, including 28.6 million into Franklin Templeton XRP.
They finally really allow Bitcoin to be used by their people, because they have been, as I've been saying, using Bitcoin from I don't know if I want to say like an elite perspective. It's like if you're a high net worth individual, you can get into Bitcoin, but you peasants, you everyday Russian people, you guys aren't going to be able to use Bitcoin. You guys aren't sophisticated enough. You need more consumer protection. But now it seems like they are opening up the kind of the floodgates into Bitcoin. And this one is very interesting because Sberbank, which is the largest lender in Russia, just issued their first crypto-backed loan to a Bitcoin miner Intelion Data. So Sberbank used its in-house crypto custody, again, in-house, just something that is a little different than what we've seen in the US. Most people are using Coinbase, but they're using their in-house crypto custody tool to back a loan for mining firm Intelion Data, signaling broader interest into crypto lending. We just saw JP Morgan do this a couple of weeks ago, basically, talking about MicroStrategy is bad. and then they launch a, oh, we're going to launch Bitcoin backed loan soon. So Sberbank issued, of course, the first backed Bitcoin loan to a major Bitcoin miner. The loan utilized their crypto custody product RUTOKEN to secure the Bitcoin collateral, ensuring asset safety. And they're exploring decentralized finance instruments and supports the gradual legalization of cryptocurrencies in Russia.
Also from Japan, MetaPlanet continues its buying of 375 million worth of Bitcoin. It's kind of, calmed down a little bit. There were kind of weeks in the year where every single day another company, institutions were buying crypto. And I haven't thought about this in a while when we're doing our analysis. That I mentioned back, maybe 6 months ago when all these companies were buying, I had a fear that they're buying right now, everything's looking honky-dory, but the first sign of trouble, will they all start reducing crypto from their balance sheets the same way that when it was coming up, they were adding to their balance sheet? And this is big amounts, right? We haven't had many headlines around this.
Keep in mind, if they can stake for, let's say, 4%, that means they're making almost $500 million a year in staking rewards. That's insane. $500 million, and they're staking more and more all the time. That's assuming that they stake all their Ethereum. You can see Strategy acquiring another 1,229 Bitcoin for $110 million at 88,600 per Bitcoin.
As the price of Bitcoin continues to fall, one of the biggest fears in the market right now is what happens when MicroStrategy, Sailor, is forced to sell their Bitcoin. And I've been through a few conferences, and also during the holidays, I've been hanging out with a lot of people, institutional traders, but also a lot of retail people. And it seems like at the top of everyone's mind is that, okay, Bitcoin is losing a lot of value, and this is scary for the market, especially if MicroStrategy hits their break-even point. So I will be covering this, guys, because I have been tracking more than 1.5 million whale wallets on chain. The majority of them are overwhelmingly very bearish on the market, which means they think the market is going down to $75,000, which is the break-even point of MicroStrategy. Now, if we hit that level, something huge is going to happen.
It used to take 3 Bitcoin to purchase 1 ounce of silver in 2011. 3 Bitcoin bought you 1 ounce of silver. Can you imagine that? Now, at $79 silver, it takes 1,113 ounces of silver to purchase just 1 Bitcoin now. Did you hear that? 1,113 ounces of silver can buy you 1 Bitcoin instead of 3 Bitcoin buying you 1 ounce of silver in 2011. That is why I keep saying, guys, silver and gold aren't as good as money as Bitcoin. Silver and gold are not going to keep up with inflation like Bitcoin has. And also, the higher the Bitcoin price rises, they cannot mine any more Bitcoin.
More importantly, I think we've learned an absolute metric ton about what actually creates an alt season, and specifically what doesn't. Those are the things that we're going to have at the forefront as to how we get better. But I want to be clear, this is not an I give up video. This is I've learned hard lessons and we're going to be much better video. With that said, let's dive in. First of all, the biggest lesson I think we've all learned here is don't fight the Fed. We learned after Jerome Powell single-handedly nuked crypto down to its knees starting at the end of 2021 that the Federal Reserve monetary policy was very important when bidding on assets. The only problem is that in March of 2023, we saw an explosive growth in Bitcoin that totally broke the concept of us needing to wait for the Fed to lower interest rates to actually bid these assets. What we saw was that Bitcoin exploded upwards due to a bank collapse. And it was very clear that the Fed was willing at any moment to inject potentially trillions of dollars to save the banking system. And that fighting the Fed became a little bit of a confusing topic.
The Federal Reserve just made a big move, injecting $26 billion. And I wanted to talk about what it means, first and foremost, how it could impact the rest of the year, especially into early 2026. And now will the crypto market record a year-end rally, or at least a Q1 rally of 2026? How does this impact us as investors? All of that, we're going to dive into it here. Go ahead and hit the like button, subscribe down below. Appreciate you guys for being here every single day with us. And a lot to get into here with the article. Let me share this with you. We're going to go go down the line here piece by piece and just kind of make sense of this together and what it means for us as investors. So this is a big, big macro event.
There's going to be a $9 trillion amount of expiry or interest, expense that the government has to pay, $9 trillion. And then they're going to do a majority of it between Jan to June of 2026. They don't have that money. So what do? They end up issuing more debts, issuing more treasuries, collecting new money, and with that new money collected, pay back the previous investors, just like in a pyramid scheme. So that's going to take place in 2026, and that's called quantitative easing. Quantitative easing and the corrupt financial system introduces new liquidity in the market. They bring down interest rates, they allow more money to be given out to more people. This causes the average Joe to have cash in his pockets, and with the cash in his pockets, he likes to invest into things like Bitcoin and altcoins. So for real new capital to come in, for retail, new individuals or existing individuals to come back into the crypto markets, we need to see an injection of liquidity.
These people who have flip-flopped and have been mostly anti-crypto, they're ready to get those big bank checks, getting ready to, fight crypto because those banks, they don't like that you're earning stablecoin yield and staking because they want you to keep your money in their checking and savings accounts where they can give you next to nothing, 0.01%, right? While they keep 4% of the interest that they get from the Fed and the Treasury and so forth. So Representative Maxine Waters, the ranking Democrat on the House Financial Services Committee, called for a hearing with Securities and Exchange Commission Chairman Paul Atkins to discuss his crypto moves and other topics. Her party has a strong chance to take the House of Representatives majority in 2026, potentially moving her back into the spot as committee chair. So again, there are other issues out there, that's happening. The world is a big place. People have different things that affect them in different ways. We're just talking about crypto here. What we need to do, though, is get that market structure bill passed. So even if whoever wins, right, Democrats and Maxine Waters and Elizabeth Warren, they come back into power, they can't do much, right? Even though the banks are lobbying the hell out of them.
If your economy depends on a material that you do not control, other nations can and will weaponize it against you. And that's a lesson that I think China didn't forget. And when you look at what China's doing today with silver, I think everything starts to make a lot more sense. Okay, so the question is, what exactly did they just do? And what are they doing now? And this is a masterclass in the global game of geopolitical chess, and I want to help explain it. What they did was China reclassified silver under the dual-use export control rules. And that means a material that can be used for civilian purposes can now also be used for military and strategic purposes. And once something falls under that category, then exports are no longer automatic. Instead, they're going to need government approval. It's very smart because if China wants to ban silver, like they do Bitcoin all the time, that would create a lot of backlash. A ban would force other countries to react. The president of the US gets mad, whatever, right? But by relabeling it to strategically important, and on paper, China can say, well, we're not banning silver, we're not attacking anyone, we're just regulating something important to us.
China has a new digital RMB coming. It's going to be hybrid, which means it's account-based and blockchain-based, so two different models with wallets. It'll work offline and online. It has smart contracts, which, listen to this is probably the most interesting part. It'll allow the commercial banks to pay interest. It's going to be, of course, regulated. It will be transparent, they say. That's interesting for, I think, a Chinese currency. And number 4, it will be full scenario, meaning it will operate within retail, tourism, healthcare, public services, even some revitalization projects, and cross-border.
This post says every cycle from the low to the high is 1,064 days, but is that actually accurate? Well, the answer is no. You can just go on X or go on Google, type in 4-year cycle, Bitcoin cycle, 1064. You'll see a lot of people just coming to the same consensus. But when you go into the charts yourself, you'll see that a different story emerges. The cycle isn't 1064 every time. And I want to give a big shout out to Marty Party for putting this on my radar. He has about 250,000 followers on X. The 4-year cycle never existed. If you use linear regression, the bull market top ends around March to September of 2026. The patient will be rewarded. But why does he have different numbers here? You do see 1064 for the previous cycle, but you see 847 and 749 for the other ones. This chart right here is one of the main reasons why you see that breakdown. So now we're looking at the drawdown from the 2015 low to the 2017 high. And a lot of posts say, well, 1064 is what you're going to expect. 1064 days right here. But Marty Party is saying 847. So what gives? Well, what gives is a wick for January 20.
What happened is it has everything to do with the business cycle, everything to do with liquidity. And that is such a good thing if you are still here as a retail investor. So let's start here, and then I want to look at that monthly momentum oscillator on the monthly. But this is the altcoin market cap chart. What I just wanted to point to your attention is if we look at FedNet liquidity, you can see it starting to tick up a little bit. I just think that's something to pay a little bit of attention to. I'm not saying this is going to keep going up, but it's something just to continue monitoring right now because we do have QT just ending after years of contraction. You can see during this moment of QT, I should say years of QT, record-breaking QT that has happened starting all the way back in the beginning of last bear market or this previous bear market. We just ended that. But look at FedNet liquidity along all that time frame. Well, let's see what happens now with this indicator. But what I want to point to your attention real briefly, and then we'll look at that monthly, is QT ending last cycle, end of July, so beginning of August. You can just see, we trickled.
In 2011, Bitcoin went from double digits. Okay? You know double digits? You know, it's $99 max. Do you remember? When Bitcoin was at $99? I don't remember because I was not buying it, so that was a big mistake. But like I said, it went from double digits to $1,200. After we had a run on gold, okay, like we are having right now. And then this is the most interesting one. In 2020, gold also had a bull run, and it topped here, July 2020. It's the same here, you can see. And what did Bitcoin perform after that? It's easy. You just go here, you pull this. I even need to put my chart lower. And Bitcoin did this. Let's say 600, 700%, more or less. After the run from gold. Okay? So, what I've been very vocal about it, and just for you to remember that here, Bitcoin was dead. Okay? Here. When gold was running, Peter Schiff was doing victory laps like he's doing right now. Bitcoin was there.
Here's a very interesting chart I want to share with you guys. This one is pretty bullish. So Henrik Zeberg, if I'm saying that right, head macroeconomist at Swissblock, tweeted out a chart that has the comparison of Bitcoin versus the S&P 500. So essentially, how's Bitcoin moving according to the S&P 500? So he says the Bitcoin S&P 500 ratio has topped. But just like in 2021, we stand right in front of a bounce in the ratio, most likely to a value of 18 to 19. So this is on a scale of 0 to 24. So it goes back to 2017. It obviously covers 2020 and 2021. And of course, now he's highlighting what's happening, in the next potential move. He says in 2021, Bitcoin soared 140% in this bounce. Today, Bitcoin is likely to rally to 150K-ish in this same rally, while the S&P 500 soars into its blow-off top around 8,200. But for all the Bitcoin is a store of value hardliners, be very careful after this coming bounce in the ratio. As I see it, this is the final dance for Bitcoin before the long good night. Enjoy the blow-off top. Now, many of you know I'm leaning more towards this scenario as far as having the higher probability of playing out. We've been talking about it ad nauseum.
50 EMA coming down, and we have this rising support. Something has to give. If we break the support on the downside, you're going to have a nasty red few days. if we break the red on the north, which is the 50 EMA, giddy up. You guys can start self-high-fiving. Things will be good. And technically speaking, we will have reversed. It's what I've been waiting for what seems like forever. We still haven't done it. Now, moving into what I've been telling you to watch, the weekly candles. I told you starting this week, we have probably one more week before the 13 cracks the 50 EMA on the weekly candles for Ethereum. I told you within the next 3 weeks after that, I am expecting a big red candle. That's normally what happens. Doesn't mean every single time. I'll say it again. Normally, that is what happens. I can show you for XRP when it broke. We got a break right here. We're waiting for the next 3 candles. We go to Solana. When did that break? We go here. Boom. We look for a big washout. 1, 2. There's your washout on the third, all the way down. And the Bitcoin, I don't know where Bitcoin's at here. Let's take a look at that one. It cracked right here. And what I say is we usually have a finish below the lowest finish right here. And that's what I'm waiting for. So this could be the week or next week.
So, did you enjoy the that? Let me know in the comments.